Okay, good morning everybody. Today's 31 October 2025. This is the first time after a while I am back to using my MacBook since it died previous days. I've been using it for 4 weeks. Okay, what I want to talk is about balance first trends. So I have been writing a script about that. This is my script. So I want to explain to you about fair value gaps and also the concept like balance price trends. No, I want to explain to you. No, I need to explain. We can talk about market structures and fair value gap and liquidity, and also fair value gap and order blocks, and fair value gap within a premium or discount array. And the presentation number one, I'm gonna explain to you about what is a BVR, so balance price trends. Okay, let's back to the chart. Okay, since this is the first video on the 31 October, this is the first video that I will made. I want to explain to you, as my promise, is explain in detail about what is fair value gaps in detail. So for most of us, is fair value gap is a combination of three candles. The second candle of three candles must be fair value gaps. Okay, let's see. This is the fair value gaps. We can click at the mark that here, and this is the fair value gap also. Whenever the price starts like this, it does. It's make strong movement. Right? There are two fair value gaps versus the bullish fair value gaps. This is the bullish fair value gaps. And the second is bearish fair value gap. This is the bearish fair value gaps. And what you need to know about fair value gaps is where the fair value gap is gonna make are forming. So there are two indication that our fair value gap gonna be strong and can be hold the price even longer or even reverse the price. Is we use that in video array. So like on here. Where's that? So fair value gaps within the premium and discount array. Okay, this is the ICT concept. So what is the video array? Video arrays is where we determine the price are using the Fibonacci retracement, and when the price are below the 50%, there are discounts, and up above the 50% are the premium. This is the premium zone, and this is the discount zone, right? So how to combine that with the fair value gap concept? So in here, there are market structures here, okay? Breakup structures. We can define it as a market structure or breakup structure like this. What we should do is waiting the price to come to the discount zones, right? We draw fair value gap. We draw the Fibonacci retracement, and below the 50%, when the price are touch the 50%, we can entry buy, because actually the price are breakup structures, breaking the structures and continue for the bulls, right? That's it. Now, and if we're not using the indicator like VWAP and volumes, the price charting like this, and enough to stay profitable. All my friends from the ICT concept use this also, because they don't even like using a chart. Don't even like using indicators. But me Personally, I like using indicators as a conviction to entry, right? So, okay, that's the fair value gaps. Okay, first we talk about fair value gap that are formed after the premium discount zones. Where the premium discount zone are, we so define the market structures. This is the bullish market structures where the price are not breaking down, is breaking off. Here's and sweeping the liquidity. Right, this is sweep liquidity. Why I mean that? Because in the past there form the fair value gaps, and when the price, oh, sorry, so when the price starts the fair value gaps and not cannot make a lot of movements and ends up with making some balanced price race. Balanced price range is overlapping condition when the both peripheral gaps and bearish peripheral gaps overlap like this. This is both peripheral gaps and this is the bearish peripheral gaps. When it's not tossing, it's peripheral gaps. It's not tossing, it's peripheral gaps. But it's not all peripheral gaps strong, right? They're only strong when the peripheral gaps are formed in the key level, at the key level, like that. In the after the liquidity sweep, like this, like, or after the video raise, in the video raise situation, like the premium discount zone. That's so strong indication that are forming when it's the price are formed the fair value gaps. It's that fair value gaps much more having a good probabilistic to take entry and they got profit. Okay, when it's not happens, when it's, but because why? That's because, yeah, fair value gaps happen anywhere, right? If you consider the selling on here's, no made it, selling on here's, no made it, because it's not the 50% rule, the premium discount zone, like this, right? Premium discount zone. So, right, and all of that are the indication. I think that's it. So I have been covered the market structure. So what is market structures? Is swing high, swing low. To define market structures is just simple to just drag a line after before in the swing high, swing low, then swing high, swing low, swing high, swing low again, and swing high again, and this is the market structures. That simple, the market structures. Why we define market structures? Because when we define the market structures, it helps us to determine whether the market actually bearish or market actually bullish, like this. Where the price making higher high and not sweeping or not break the high low, which is the price are bullish condition based on the market structures. Where the price are, in other hands, making lower low against and not break out the lower high, that's indication the market are actually bearish, right? That's simple. Well, not that simple, but you need to waiting and you need to moments where the actually their price are consider to wait. Okay, so yeah, I've been covering it off. So let's continue to the next. Is we're talking about liquidity. So after microstructure, we should know about liquidity. There are two types of liquidity. internal and external, and internal liquidity also as simple as, I don't know what is the internal liquidity, but internal liquidity is actually where form where the price are making a resistance, simple as the resistance support, the internal liquidity, and also external liquidity. So the external liquidity, okay, sell side liquidity, a buy side liquidity, this sell side liquidity. It's forming in the external range, not the internal range, right? In the internal range, this is the internal range, this is the external range, this external range, right? How you know it? Got it. So after the liquidity sweeps, where this perfect forms is, after the liquidity sweep and making some fair value gaps, we wait the price to touch the fair value gaps. After market structure shift, we buy on here to wait until I get that. 1 to 1. Restore ratio are easy. 1 to 0.5. Restore ratio are easy. Just by using that indicator. Okay, that's it. Thank you for listening and I hope you enjoy this video. See you in the next video.